priorities, specifically on priority 1, which is about developing an investable infrastructure pipeline that can attract private sector participation. This priority seeks to develop a framework that will offer guidance for creating a robust and investable pipeline of infrastructure projects by emphasizing critical cross-cutting enablers and their implementation across the asset life cycle. And within this framework, data is deemed an enabler of well-functioning infrastructure markets, as well as a critical input for developing this investable infrastructure pipeline, influencing both the enabling environment as well as the multiple stages of the infrastructure life cycle. In this regard, the framework is complemented by 2 deliverables that explore the role of data. And here we are talking about the deep dives, one of which is the note on improving the availability and accessibility of key market data. The market data provides a structured mapping of key infrastructure market data by really evaluating.
Hear? Or is it just my computer?
I hope
I can hear you, Buitumelo.
Okay. People can hear me. Okay. So I was just explaining that the market data node is meant to provide a structured mapping of key infrastructure market data by evaluating the extent to which consolidated and comparable global data is available. It also notes and offers actionable measures to address existing data gaps as well as barriers. So today's session is about presenting the insights. Can we please mute ourselves? Veron, can you help me in muting the colleagues that are not on the floor? So today's webinar is really about presenting the insights from the market data node to really deepen our understanding of market data usage, the gaps, the barriers, as well as the opportunities. And we hope this will support effective pipeline development and the mobilization of private sector participation in our public infrastructure investment. The market data node that we'll be talking about today was approved by the G20 finance ministers and central bank governors in July in Zimbabwe, and is published on the G20 presidency official website. We will provide the link on the chat a little bit later. Before I hand over to our speaker, Henri, for the insightful presentation, which will be followed by a Q&A segment, I would like to formally introduce him. Henri is the GI Hub program lead at the World Bank, working under PF. He leads efforts to leverage the knowledge and data of the World Bank and its partners to advance sustainable, low carbon, resilient, and inclusive infrastructure investment. Henri has over 20 years of experience in infrastructure policy, economics, finance, project preparation, and resilience. Before joining the World Bank, he was the Chief Content Officer at the Global Infrastructure Hub, the G20's dedicated infrastructure body, where he oversaw the strategy and the knowledge products aligned with G20 priorities. He continues to support the G20 infrastructure agenda through his current role. And I will now hand over to Henri to take us through the presentation, and that will be followed by a Q&A segment. Over to you, Henri.
Thank you to Buitumelo and the whole sort of GTAC team for organizing today's webinar. It's a pleasure to be back and presenting you with that sort of other notes. So thank you for being there. Very looking forward to the interactive discussion we'll have after the presentation. So as Buitumelo was saying, we're excited today to share the notes we've developed in collaboration with G20 colleagues and also private sector on market data. I think the objective today is really twofold: is to share what we've heard and seen when we try to sort of map the the key market data that matters to infrastructure markets in general, but also to hear from you, practitioners across South Africa and beyond. But what are you seeing as sort of key data gaps as well when you discuss with investors, and also looking forward to any sort of future analytics work that we could do together. It's very important to sort of hear back, because obviously when we looked at this, we looked at it very, very globally. So before we dive in, maybe just two caveats that I wanted to mention. First is that there are still a lot of significant data gaps. So we're trying to map, you'll see, to map all the sort of the data we could find globally. We may have missed some in South Africa and other markets, but clearly there's still a lot of gaps, especially in the emerging market. And so that's why your insights are very valuable as well. Each piece of feedback that we get hopefully will bring us sort of closer to sort of fully picture as to what's happening and where the data might still be missing. Second point is also let's say we've tried to put a lot of effort in trying to assess data gaps globally, but obviously each country is different. And so, what we have seen globally might not be necessarily still applicable to South Africa. So again, keen to hear feedback. And also on a personal level, I'm less familiar with Africa continent than I am with, let's say, Asia or Europe or North America. So keen to hear your views and feedback as well. It's a way for me to sort of learn what may matter more on the continent. And for any question that sort of be more specific to Africa and South Africa, be very happy to sort of connect you with colleagues within the World Bank office that will certainly know much more about the markets over there. So with those notes, before I get started, let me share the presentation. It's loading. Okay, Baron, if you could confirm that you're seeing the full presentation, not the one with notes. You see the full one, right?
I can see, yeah.
I don't have notes, but I don't want you to see the empty notes. Okay, so let's get started. So the presentation will be sort of structured in three parts. First, I'm going to go through that quickly. It's basically the priority one of the G20 Infrastructure Working Group, but Tim already sort of mentioned what we're working on and how that sort of work on market data fits in. But I'll still sort of summarize again what we have done there. The second part will probably hopefully be the most interesting, is sort of where I'm going to share what we heard from investors, what is the market data that matters to them, and I'm going to try to illustrate some of the gaps that we've seen and to sort of explain why it matters as well. And then the third part, which is probably more relevant for the G20 group, is what together we decided could be recommendation or actions that the G20 as a group could take in order to address some of the gaps that were identified during that work. So priority one, so the key objective, again, I'm going to go very quickly through this, is to look at tools and other elements that really help develop an investable infrastructure pipeline. To do this, we structured that priority into three deliverables, a key framework that will be endorsed very soon, and it will basically cover, I'll go through that, pretty much everything that's required to develop that investable infrastructure pipeline. And as Bato was saying, we basically have sort of tried to sort of focus as well on data as one of the subtopic. And to do this, we basically split the data topic into two. One that is market data, which we're going to cover today, and the other part that is more project data and sort of looking at sort of project level data, something that's also very, very critical. Investors are very, very much looking at that. I think in general, investors will look at two things, right? They look at your project and all the data that comes with it. But then they will also look at the market to get a sense, to get benchmarks, to get a sense as to how liquid the market is, precedents, etc. And the two together sort of really give investors, I guess, an overview as to how good the opportunity is from their perspective. So together, that's priority one, and the sort of three deliverables sort of work together. Like I said, the last two are readily available, and I think the link has been shared on the chat. The first one is being finalized at the moment. It's a very exciting document that will sort of map all the tools and all the great knowledge that exists in order to deliver those infrastructure pipeline. All right, so the framework itself will be sort of covering legal regulatory framework, government capacity institution, funding and financing, across the entire infrastructure lifecycle, and in there we'll sort of map, like I say, all the sort of the great tools that exist, and then within that we have links to the market data note and the project data practice guide, which is another document. So altogether, it is basically how South Africa sort of managed to put all the knowledge around creating an investable infrastructure pipeline into one document made of three parts. Okay, so the objective of the market data notes, and I'm going to only focus on the market data notes, is really to, like it's written here, highlight existing market data gaps. We really wanted to work together with the G20 to highlight those. And to do this, we obviously really work together with the private sector. The PF, GIA Hub sort of had a long relationship with dozens of data providers. Many of them we used when I presented the global trends to that same group, I think probably a month ago now. And so they also are in contact with investors, and they're very much hearing all the sort of data gaps that investors are concerned about. So the market data, for the purpose of this work, because it's not a term that's used often, is really any data that refers to data sets that offer an opportunity to have global benchmarks, so usually sort of time series. And that's really a way for investors that may not be comfortable, sort of don't know market, to assess that market and to benchmark performance and other aspects with historical evidence from the market and then compare it to others. That's really what we're looking at. Again, project-specific data, which is extremely important, is covered in a separate guidance note. And the two obviously work together, like I explained before. But here we're just going to focus on those sort of global market data benchmarks. So what that matters for infrastructure investments. So all data underpins sort of transparency and comparability. And eventually that's how you get investor confidence. Investors like to sort of compare markets to get a sense as to how potential new market or a new subsector has actually performed versus what they used to. So that's really essential in providing that transparency and that visibility of the market. That's also from a government perspective then. It's actually very useful, especially for regulated assets, because that helps sort of get a sense of tariffs or value for money, or when you sort of prepare PPPs to get a sense as to what the market could be accepting in terms of risk allocation, what type of returns, etc. So very useful to have this. Otherwise, you're sort of a little bit blind when it comes to structuring those deals. And eventually, investors obviously they need assessment of risk, and many of those risks, especially when we'll talk about that, sort of default rates, etc. They will look at sort of the performance of a particular market. They will look at how liquid the market is. Investors obviously, when they invest in new assets, they want to make sure they'll be able to sell it back on the market if they need to. So obviously, all those sort of data are very important to them before they make a decision. So it's all about the project itself, but also the market in which you invest in. And I think that's what we've tried to basically look at for this note. So the structure of the note, and again, the link will be put in chat at the end of the presentation. Structures like it's mentioned here. So we talk about the objectives. And then we could not cover every topic. That would have been too big. So what we did, we selected, and I'm going to explain how we selected it and what we can learn from that selection, some key data themes. And for each of them, we basically present why they matter, the overview and context. And then we have an assessment of global data sources that's complemented with the mapping of all the sources we could find. So this way, if you're looking for global benchmarks on a particular angle, we've tried to basically sort of highlight where you could find them. In some cases, there's none of those, and so we've tried to map them at least across the G20 members. So you'll see an appendix of that note. You'll get all the sort of links. Some of the data is commercial, so you may only get high-level summaries. And some of it we managed to extract into and then put it into the all monitor report. So you will still be able to sort of find regional sort of sector aggregation, and some of them completely open, so you can use them as you see fit. So I'm just going to show quick examples for one of the theme. Again, we've tried to be relatively concise. We didn't want to sort of end up with a 300 pages notes. But in there, you'll sort of see why that matters. We'll also try to illustrate by extracting one of the indicators that's related to the theme. Obviously, each theme, sometimes you may have like 10 indicators that could be interesting for investors, but we tried to pick one and then illustrate what are the trends to sort of give you a sense of how investors might look at it and interpret how the market is doing through that data point. And then most relevant, I think, to the G20 was really that gap in opportunities for global action. So really for each of those themes, we're trying to ask ourselves, and in collaboration with the G20 members, what is it that the G20 could do as a group in order to address some of those gaps and opportunities? Obviously, some of them will be local, like basically we need governments to collect that data. But you'll see that there are some opportunities that we're trying to continue pushing through the G20. And last but not least, like I say in appendix, you'll have the list of global data sources that we have identified, and obviously you're free to look at them and use them in your everyday work life. All right, so that was very quickly what we're trying to achieve and how the market data notes sort of fit within the entire priority one of the infrastructure working group this year. Like I say, I think in a month's time, you'll get the entire framework and all the notes working together and available online. But at the moment, you have those two notes on data. So that leads me to the second part, so really looking at those themes and really market data that matters to investors. And hopefully here there'll be some insight that you could use or sort of, look at some of those gaps and sort of think about how you could potentially sort of fill them within the South African context, if that gap is indeed a problem. So to do this, what we did, because obviously, like I said, there's a lot of themes that we could have covered. So what we did, we started from previous conversations. It's not the first time that we've discussed this at the G20 or with private sector partners. So there's a lot of consultation that happened. And so we basically went back and sort of relook at all the recommendations, all the gap that were expressed through those various engagements. I'm not going to go through them. The G20 regularly interact with investors. And obviously, we discuss with the G20 members as well quite often. There's also a few documents that have been written, but never really entirely focused on data. So this was the first year where we actually tried to sort of look at the market data angle solely and try to see what we could do. To complement that, first I'm going to talk about the 8 themes. So the 8 themes covered in the notes are very much linked to the framework. So remember the framework, that's going to be the broader document, and the framework is going to touch on the importance of economic preconditions, the infrastructure enabling environment, and then the work around infrastructure asset life cycle. And so for those, we basically sort of identify a few themes, and I'm going to explain how we sort of validated that with investors, and then that's how you sort of have the framework itself, and then you have the data element that's sort of linked to it. So all right, so this one is potentially kind of interesting, and again, many of you may already have a good vision as to what investors are looking at. So what we did, we actually used sort of an investor pool, I guess, people that we work with we've been working with for quite a few years now, and we basically asked them, we proposed them a list of sort of 9 themes, and we asked them to sort of rank them slightly differently in terms of relevance, in terms of where they see the biggest gap, and where that gap is absolutely critical. The answer is, I mean, the result that we got is pretty consistent. One thing that's for sure consistent is that all across the board, anyone within emerging markets found the gaps to be much bigger than in sort of high income economies. So I think that's that throughout. We got mostly answers from private sector, but we did get feedback from government and DFI as well. So that's kind of like a mixed view from those different partners. So what's kind of interesting is actually the one that's the most relevant, the biggest gap is volume. So eventually we didn't cover it in the notes. So the biggest one, we didn't cover it in the notes. The reason is because the G20 had done a lot of work around evaluating volumes of investment in the past, and we didn't want to redo that work. And it's also quite extensive. I'm gonna cover it through that presentation. So you're not gonna get that in the market data notes, but I'm gonna cover it today. When we look at the 8 themes, the first one, I mean, the most relevant one, so the one that had probably the biggest gap was the cost of infrastructure delivery. I'm going to talk about that, but I think probably not a big surprise. As we know, it's very difficult to get benchmarks as to how much it costs to deliver a piece of infrastructure. For those that have tried to sort of benchmark, even on things like roads, you'll know for sure that this is quite difficult. And obviously for investors and governments, that's a key gap. So this one was by and large, especially across government DFI, one of the key challenge. And then after that, which we have is the two following ones are kind of linked to performance in a way. One is around financing cost benchmarks, so the cost of capital, etc., and the other one is the financial performance, including defaults and return expectation, etc. So we need those numbers, as well, can be hard to find, but it can be critical, obviously, for private sector to develop the bids and government to basically decide on regulated asset, etc. Right? And after that, you have quite a few around capacity. So this one depends. Some countries have sort of better assessment than others. So here's the capacity of the government to be able to negotiate and to carry out the development of a project from the beginning to the end. For investors, it's a big risk because obviously what they don't want is to spend too much time developing a project and then a project not happening. And so that's why I think those are kind of important. The theme on climate risk, you might be surprised to see that it's there. I think that it's a more reflection of the fact that probably half of the people that responded, it's not their job, or at least they feel it's not their job to worry about climate risk. We could argue around whether that's the reality, but that's why it's sort of ranked a little bit lower. So for those that actually really that was their job to sort of focus on climate risk, the gap is enormous, and as we know, data for this is can be quite difficult to get, and models obviously need to be constantly evolved to enable that assessment. So that's that. I think the last two, I was personally a bit surprised that project delivery and management, which is kind of a cost of run, etc., was not ranked higher. Again, I think it might be more if we had asked only the government, I think that one may have ranked a little bit higher. But that's the way it is. And the last one, market liquidity and depth. I think what we've seen is that there's quite a bit already on sort of bond markets, etc. There's still issues there, but I think in terms of getting a sense of how deep the markets are, people were less concerned about that. So I think in general, those are kind of like the feedback that we got from investors globally. Like I said, lower income countries tended to have even bigger gap for each of those, but the responses were quite consistent. So I'll be, like I said, very keen to hear whether, from a South African perspective, whether you would, that's also the feedback that you're getting from investors in terms of ranking and what, which data sort of matters the most from their perspective. Okay, so now I'm going to try to illustrate some of them. I'm going to go through all of them. Again, we're going to share the link, and so you get a more thorough analysis for each of them. But try to get a sense as to why investors may have sort of highlighted those as key gaps, and why the data can be sometimes we feel the data is there, but actually when we look at it, realize that it's actually quite difficult for investors to or private sector or government actually to get a good sense of what it says. So the first one is the investment data gap, like how much is being invested in infrastructure. So usually what you see is that we have pretty good sense of the large transactions. So for those that sort of work with that, you may have like the MJ Global, the World Bank has a great report in emerging markets, that's got probably double the amount of transaction that MJ Global has. It's called the PPI database. And I think in general for large transaction PPP type, we've got pretty good coverage. But that's not the entirety, obviously, of the private investment in infrastructure, and it doesn't really tell us about public investment in infrastructure. When it comes to private, one of the key gaps is around corporate investment. And so what we see is, typically here I've taken the example of the water utilities in the UK. If you look at it from a transaction perspective, you may feel like the UK water utility market is less than $1 billion a year type of market. But the UK has got a regulator that actually sort of collect data from all those sort of private water utilities. We can discuss about how that regulator has done in the recent past, but they have a regulator that collect that data. And actually what they see is that all the utilities together are investing closer to 10 billion. So that's obviously like a ratio of 1 to 10. And what we're seeing is that it's actually quite difficult for investors to get a sense of the depth of that market if they only look at transactions. So yeah, water utilities be probably one of the biggest one, but as a result, what you see, when people are looking at markets where they might be interested to move in, if they don't get that data, they may sort of underestimate the size of the opportunities, right? Hence, they may not come to that market, and you're not going to get as much competition potentially. Another example, so the water obviously is difficult because a lot of local utilities, but even when it comes to energy, what we've seen, we've done a comparison recently where we looked at the transaction data that I mentioned, the global, the PPI, etc., and we compare that to what the IA or IRENA would basically say, and what we've seen is a clear gap between what those are capturing, and this is mostly looking at the asset level, so they're counting how many assets, how much power is being put into the grid, versus the transaction that we managed to capture. And even with those, especially when it comes to renewables, we capture, across emerging market, maybe half only. That's not the case in South Africa. Actually, South Africa has got a very structured program, so we do capture that in a particular subsector. But just to illustrate the fact that, again, transaction doesn't necessarily mean total private investment. And again, because investors only have access to the one on the right, which is the transactions, they may not actually see the entirety of the potential in that market. And obviously markets that are able to provide that evidence, for sure, investors will look at them a little bit closer because they will actually get a better sense of the actual size of opportunities within that market. So that was, again, just to illustrate. Obviously, there's other sectors. And each country might be different. Like I said, South Africa, when it comes to energy sector, is actually pretty. If I was doing the same graph, it'd actually be very close. But other markets, that's definitely not the case. Especially as they move towards smaller renewables, the type of like standard PPA that don't require a lot of structuring. Then they can actually be quite difficult to capture. And South Africa is developing more of those. So eventually you may actually start having a gap between what people see through transactions and what's actually happening in the market. All right, so that was kind of like one example. So if I look at, so we have 8 themes, right, within the notes itself. And so the first 3 were around sort of cost of infrastructure delivery, and then we had the theme on legal regulatory framework, and theme 3 that was on institutional capacity funding and etc. I think I'll go a little bit deeper onto the first one, so I'm not going to cover it here. But when it comes to the infrastructure enabling framework, I think the main recommendation that came out of the work that we've done with the G20 members is that there's actually already platforms that help investors getting a good sense of how strong the market enabling environment is. One of the key leading documents to do this platform is called the Benchmarking Infrastructure Development. Just happened to be done by colleagues at the World Bank, but it's really very thorough. It actually covers 150 countries, including high income and sort of emerging markets, and that really gives you like 100 indicators on that enabling environment. So it's really a way for investors to get a sense as to how's the market structured, how strong the market is when it comes to project preparation, procurement, etc. And that goes a long way in sort of giving them that sort of due diligence on the potentially new market. And if you haven't been there, you'd actually be, pleasantly surprised to see that South Africa is doing very well, especially in terms of project preparation. But again, I think it was very important for those platforms is continuing responses and data input from countries. We rely on countries responding and sort of providing those hundreds of indicators But after that, once we have the platform, it's very powerful for investors because in one place they actually get to compare all those markets together. So that was kind of like a key recommendation, which is in a way we have those platforms already. And what we need is countries to basically feed data into them and use them. So I'm just to spend a few minutes on the cost of infrastructure delivery. So that one I remember was the first one, was the top one, top request. Here, I mean, it's clearly delivery cost, certainty is a key challenge, right, for investors and governments, especially when it comes to mega project, but not only. I think a bunch of reports that have been written on the topic, where cost overruns. I mean, the infrastructure, the Inter-American Development Bank found a sort of 30%. When it comes to cost overrun, I think depending on sectors, sometimes, especially for mega projects, the cost overruns can be much higher than that. So it remains by far and large a key challenge. And then an additional one is that sometimes regulated assets and long concessions, there's that is a feeling from the market that there's lack of assessment of whole life cycle cost of capital spending. So that's an issue from the private sector side, but also from the public sector side. So many projects are sort of done without sort of getting real sense as to how much it's going to cost to actually maintain it, and then sort of grade it over the life cycle of the project. And so eventually that sort of creates those, as we know, sort of pipeline of projects that get a headline price that eventually sort of, keep increasing. And then a project, investors spend a lot of time preparing a project, but because the cost was badly evaluated from the start, then eventually the project collapsed. And that's really sent a sort of bad messages to the market, because that's all that time spent by investors is cost them money. So eventually they may not come back, or sort of be a little bit more cautious next time they try to sort of co-develop project with investors. So that's really kind of a key challenge. I mean, here that's where I think it's more project data and sort of project work issue. But the challenge that we see is that there's very little that comes back as market data. So we know about those cost overrun, etc., but there's actually no real data set that exists. There's a few, but they're sort of privately owned, and no one really has access to that data. So that remains by far and large kind of a key challenge. And I think markets where you do have, I guess, more history and more data will tend to sort of send a better message to investors, because at least they know where they.
You muted, Henry.
You're muted.
Henry, we can. Thanks.
You did that by mistake. We only
Oh,
lost
okay.
what, the last 40 seconds.
Okay. Afraid you was going to say the last 20 minutes. But that's good. It's only 45 seconds. That's good. So when it comes to G20, we couldn't really look too much at the sort of the cost of delivering project by project and the cost overrun. That was it's too difficult. There's like I said, almost no country that reports that. So for us, we're looking at some global data. Obviously, there was no data on this. There is one data set, like I said, privately owned, but the data is not accessible to anyone. So I think we kind of stayed away from that one. Instead, what we looked at is something that most governments have, which is the cost index. So most governments try to publish some cost index, historical data that sort of indicate how the cost of infrastructure delivery or the cost of construction in general has sort of evolved over time. And you might feel that this is very, very much like just inflation, right? But actually what we've seen is that across the board, by far and large, especially in the recent years, it hasn't been like inflation at all. And you can see on the right-hand side how it's sort of moved away, and with trade tensions, etc. Nobody knows exactly. So that has actually become quite a bit of a risk for investors, or especially in asset that needs to be built. And so getting a sense of those sort of index is quite important. And what we've seen is that while most countries, at least within G20, had some sort of index, the definition varies greatly. So we had few that actually had infrastructure, sometimes by subsectors, but quite a lot with sort of just general construction or building construction index, or in the worst case scenario, building materials, and a few where there was actually no data. And so obviously in those markets, you can imagine sort of new investor coming in would be basically blind as to whether you should use inflation or whether actually things are sort of been moving sort of faster than inflation in recent past. So I think here, when we come back to that, there's really a gap of common definition across countries when it comes to those index, and very difficult comparability across jurisdiction. So again, like I said, we'll come back to that definitional issue, but that's one of the aspects of definition that's complicated when we try to sort of compare data across the board. So here, I mean, this is clearly one of the indicators that investor and contractors sort of look at. I think South Africa, I think we had a civil engineering one, so it's probably middle of the pack, not by subsectors, but definitely better than some of the markets where we only had sort of building materials or sort of general building construction index. So here we have provided the list of all the G20 index in the note itself. So that was the first one. The second one of the sort of second one, I'll go back to the financing cost and the financing performance after. But staying in the enabling environment first. Another aspect where there's a lot of gaps in the data that's very relevant to emerging markets is how much funds are available for pipeline development. So I think if you look at all the countries, and again, if you look at the benchmarking infrastructure development where we cover 150 countries, you'll see that most countries have something that resemble a PPP unit or some sort of facility. But when you start looking at the business model and how much those facilities are able to support projects and how successful they have been in the past, that's when data actually becomes very, very complicated. And most of the time, actually, we don't have a consistent view. So for us, DFI and sort of donor countries, that's a challenge because then it's very difficult to replicate what has worked if you don't have that data. What we know, if we look at it at a very, very high level, countries that say they have project development funds, and again, here we usually don't have the size of that funds, they do seem to do better in terms of private participation in infrastructure. So that's the graph on the right-hand side. But again, the data is the quality of the data is not great. So we seem to indicate that this is useful. But again, the fact that the data doesn't really exist makes it very difficult to scale up the best practices. So that's definitely something that is probably more relevant to emerging markets, but that was definitely one of the key gap. And in fact, we at the sort of PFGR Hub in collaboration with GIVE, we're trying to sort of map those project preparation facility in more detail. We had done some work about a couple of years ago. And so anyone that sort of have good visibility on those project preparation facility on the African continent and how to sort of find that data, be very, very, very much interested to hear and connect because that's obviously very important data from a DFI perspective. So that's for additional capacity funding and financing. So those were enabling environment type of market data. Now the second part is really sort of looking at infrastructure life cycle. And so here we had more themes ranging from financing costs all the way to climate and including sort of financial performance as well. So here there's a lot of different recommendations. I'm not going to go through all of them. But I think by far and large, there are some data out there, but I think the general feeling is that probably within DFI as well, but also within governments, there's probably more data that exists. Most projects get approved or have sort of studies that sort of look at the potential the financing cost that got agreed or that the government managed to get, but usually the data kind of disappear after that, and so as a result, it's actually very difficult to capture those benchmark. So when it comes to financing costs, which is the first one and very critical, especially when we do sort of PPP negotiation, etc. Like I said, it's very hard. There are a few partners. So ADEC Infrastructure capture the cost of capital data for mostly high-income countries, but also some emerging markets. And so the way they do it, they look at assets and sort of look at evaluation and sort of derive the cost of capital by asset. So it's very detailed work, but like I said, it's very it takes a lot of effort. And usually data is very difficult to get. So in emerging markets, they actually managed to only cover 5 or 6 of them, and they're mostly high income. I mean, the upper middle income countries. So I think here there's definitely a gap that could be filled, maybe not perfectly, but at least sort of using whatever studies are sort of being done on a project by project in order to sort of build up over time those data sets, because otherwise you basically sort of left with almost nothing. And then what happens is that people revert back to cost of capital that is based on sort of sovereign and sort of look at sort of general rates for the cost of capital. And we'll see how that can actually be problematic when it comes to infrastructure. So yeah, financing costs definitely one of the key challenge. There are a few for some sectors. Some organizations like ARENA and IEA have tried to do some work, but again, usually what they do, they start from the cost of sovereign debt, and then they add some premium. There's some studies that have been done on that, and then they add a bit of margin, and basically it's the best estimate that they have when it comes to cost of capital. Which again, there's more data within markets, so the data has not been captured and then presented, and at the end, what you get is potentially sort of the wrong assumptions when you develop your model of value for money assessment, etc. So the other part of that is financial performance benchmarks. And here we really looked at a bit more detail into the default rates, something that's obviously at the G20, it matters a lot because that's where potentially some of the regulation like Basel, etc., could be discussed. And here I think it was one of the big achievements of the work that we've done this year. We've basically sort of worked with GEMS, which is basically a database of all the MDBs that sort of share default rates data across all the entire portfolio. The granular data is not available, but there's some sort of overarching sort of statistics that are made available. And this year we've worked with them under that sort of priority one to develop the next version of their report. There will be a dedicated infrastructure section that will actually provide default rates across countries, sectors, etc., for infrastructure. That's a big achievement because again, that's given us more granular data as opposed to have to rely only on sort of general default rates. And the reason why that matters besides regulation is really that if you don't have that data, what investors or banks will eventually do is they will start with the country ratings. And then they build up from there. They will add the risk premium on top of that. When it comes to actually infrastructure, and even more so infrastructure that got co-developed by DFI, has got some guarantees, what we're seeing from data sets is that actually the risk is much lower than that. And so as a result, the cost of financing should be actually lower than that. So there's a bit of like a perception challenge here from investors because the data is not available, that actually emerging markets looks more risky because again they start from sovereign. Well, actually at the project level for infrastructure that's not the case. They should actually start lower. And GEMS and some of the other data we collect from Moody's and report monitor report kind of show exactly that actually when it comes to infrastructure it's not as risky as it sounds, even in sort of low income countries. So that's really one of the key achievements I think this year is to being able to sort of put that out for infrastructure and hopefully address some of those perception challenges that we still see across the investor cohort. So again, I illustrated some of the themes. There's more in the data notes itself. But didn't want to sort of talk about it for 2 hours. So again, happy to sort of take questions, but also we'll share the link and you'll get more into the note itself. So now we're just going to move quickly through the third part. Again, maybe more relevant for the G20. So that's basically when we look at all those gaps and we're trying to identify what is it that we could do as a group, right? And so we're trying to sort of summarize the key gaps or talked about them, the investment flows, funding gaps, benchmarks, financial metrics, data comparability, project level terms. I think one common issue that we found here, and I talked about it during the sort of the cost of delivery, but also when it comes to all the data sets, the primary definition. What we see is that infrastructure is not defined consistently across geographies. Sometimes even within the same country, we have different definition. And so as a result, it becomes very difficult to extract performance metrics, cost index, etc., if everyone reports infrastructure slightly differently. And obviously, if you mix that up with different countries having different standards, you end up with global regulator incapable of actually sort of coming up with the right regulation because they're actually not getting the right data. So at the GIAB, we had sort of done a lot of work with the Basel Committee, for example, and that's clearly the feedback that they had, which is, yes, some indication infrastructure is less risky than other assets. But again, because the data is not collected in a similar way across jurisdictions, it's actually very difficult to come up with an assessment of the sort of the required cost of capital. Hence, we can't change the regulation. So I think that's something that we sort of trying to address through the G20. But that remains also at the local level a key thing is that if not everyone defines infrastructure the same way, it becomes very difficult to have an infrastructure asset class and sort of making it attractive to investors. So again, that was the gaps, and when we looked at the opportunities, there was quite a few. I mean, probably four that we highlighted. The first one, like I say, was global standards and definition of infrastructure financing. So that would definitely help sort of address some of the regulatory challenges that I've mentioned. The second opportunity was to develop more collaboration and partnership. I've discussed about GEMS and how we, together through G20, were able to provide infrastructure-specific data set when it comes to default rates. And we certainly sort of hope to be able to replicate that with others. The third part we've started through that note is to address the issue of accessibility or the lack of mapping of those data sets, right? So if you when you look at the note, you'll see there's actually a lot of data points, but to our knowledge, it was before that note, there was no place where all those sort of data set related to infrastructure finance were put together in the same place. So we're looking at ways to sort of make that more accessible so that everyone is able to sort of look at that quickly. Obviously, ChatGPT could help you, but what we found is that this is quite specific, and eventually having sort of that repository of all those data sets and delimitation as well, you kind of need to have like a separate document. The fourth one, which is not addressed here, but that's really the sort of project lifecycle data, and that's really the work that's being done on practice guide on how to keep data at a project level organized and comparable so that you're able to sort of drive the project development the right way. And I guess overarching here, one of the key feedback that we got from countries in particular is that even if you add all this, what's really critical is to support, I guess, the institutional strengthening, capacity building, helping every practitioner within countries to be able to understand why those data matters, how to extract interesting insights, and how to sort of feed back into the system so that investors can actually get the right insights when they look at new markets. That's very much essential because many of those the data points that I've mentioned, eventually at the end of the day, the government will have to take a role in making sure that those data sets are available and so structured the right way. And that together, then you start having like the right data ecosystem that makes your market more attractive to private investors. And so hopefully through that note, will sort of help achieve that. But again, there needs to be some capacity building at the sort of government level to be able to equip people with a way to use that data and to sort of shape it at a more local level. All right, so very quickly here, so what we co-decided as a group is that so three things we endorsed. I mean, the countries endorsed, we're just making recommendations. Country endorsed the idea of having a forum that will look at how we could advance that that definition of infrastructure, so that again, from a regulatory perspective, it gets easier to understand the performance of the infrastructure asset class overall. It's obviously a huge undertaking because, like I said, many countries, I mean, most countries define infrastructure in different ways. But we'll start with a forum that will involve the regulators, central banks, and others to sort of identify what could be the steps in order to address that challenge. The second one is, like I said, the mapping of all those data sets. So we've started through that note, and we're looking at how we could sort of complement it, and sort of making that set of note and that mapping more interactive. To this date, we've mapped about sort of 50 plus global data sets. But again, we may have missed some. So if any of you has got insights, also other data set that we may not have seen, we very much welcome the input. And last but not least, the partnerships. Like I say, partnerships with GEMS. We're looking at potential partnership with on the sort of the bond insurance, because I haven't mentioned it, but that's one of the key challenges, is how we get more clarity as to how those bonds are being used, because at the moment the use of proceeds can be very difficult to interpret, and then that becomes very difficult to see how much of those bonds, for example, we use for infrastructure investment versus refinancing, etc. So we're sort of looking at opportunities to partner with groups that may have data but currently don't necessarily have it in a way that's useful for infrastructure players. So this way, we're trying not to sort of recollecting data, but sort of make it more accessible through partnerships. So here again, if you have any sort of ideas or data sets you wish were sort of more granular, especially when it comes to infrastructure, very happy to sort of take ideas. And I'll stop there. That was I think an overview of the notes, and I think the note itself, the link will be put in the chat. Thank you.
Thank you. Thanks, Henri, for the great insights. That was really interesting to see. And we'll go into the Q&A session in a moment. And I would like to encourage the colleagues that are online to kindly raise their hands so that we can take a few inputs, whether it's a question, it's a comment, or anything of that sort. And maybe while they do that, I just want to reflect on 3 points out of what you have said. The first one is this definitional issue of infrastructure. And I can tell you that in South Africa, we are also struggling with those kinds of issues. The Treasury defines infrastructure in a particular way, and others within the ecosystem defines infrastructure in a particular way. And I think over the last couple of years, we've been told that our definition of infrastructure has sort of been inclined towards physical infrastructure and not so much on the soft side. And I think there is some way to go there. And when I look at, I mean, one of the, what do we call it? One of the changes that we made in our pursuit to also have infrastructure as an asset class. There's a regulation 28 that we issued. It also defines infrastructure in a particular way. Again, regulation 28 is done from a treasury perspective, but even when you look at the conventional definition that we use versus the definition that we used in regulation 28, you do see some variations there. And I suppose it's no wonder that you've raised some of the gaps here, because on the one hand is that we are not able to, I mean, look, we can talk about the fact that we don't collect all the data that we need to collect. But on the other hand is that because of these definitional issues, you also have infrastructure that, well, benchmarks that are not necessarily comparable, which I think is quite telling from this presentation. And the second is, and while I'm talking, I'm really assuming that someone will raise their hands at some point. The second one is this interface between the enabling infrastructure as well as the pipeline development interface. Because one is that projects don't happen in a vacuum. So it doesn't matter how great your pipeline is, you are developing that infrastructure within a country. And this is where the issues of enabling environment comes in. You've got countries that are really good, and South Africa, I suppose, is somewhere in the middle. From an enabling environment perspective, I think that we have a lot of the factors on the ground. But from a pipeline development, I do think that that's where we have some constraints. And what I'm still battling with is whether you look at regulators, you look at policy practitioners, you look at investors and so on and so forth. Everybody is interested in this data, but I don't know if one is waiting for the next to say you are the one that must invest in making the data available or not. So that's something that is quite, for me, telling. The third one, which I'm really happy about and has been raised particularly in Africa, is this issue of the cost of finance versus the default rates. I mean, it has been proven over and over and over again in Africa that we are not as risky as sometimes the cost of finance from investors seem to suggest. So for me, I think it's just one of those things where I'm saying that I really cannot wait to get to a point where our cost of finance really reflect the concomitant risks that investors are taking on the project, but also on the countries where they're investing. So those were the 3 points that I just wanted to reflect on. I would like to recognize Rachel, followed by Sibongile. Can I ask that you please introduce yourself before you post your question? Rachel, please come in.
Thank you very much and good afternoon. Thank you for the presentation. My name is Rachel and I'm with Old Mutual Alternative Investments and I lead the public-private partnership investments. So my question, maybe not necessarily to Henri, but to yourself, Boitumelo as Treasury, just with regards those benchmarks. I think from our understanding, or at least what we've seen in the history of, these triple P investments, that information is not necessarily accessible for benchmarking purposes. But I would imagine that Treasury is in possession of that information so that they could make those benchmarks, noting that from the private sector side, there might be a lot of commercial disclosures that are not necessarily public, etc. But is there a way that we can get over that hurdle just for comparability purposes? Thank you. And success in these triple P projects. Thank you.
Thanks, Rachel. Sibongile.
Good afternoon, colleagues. Thank you so much for that informative presentation. I'm Sibongile Nkosi from Goshen Business and Career Advisory Services. I just want to highlight that we are working with an organization that has developed 2 complementary innovations, the Great Fit, which builds youth enterprise pipeline into infrastructure-linked sectors, and also an inclusive procurement management system. This is a digital system that tracks procurement, inclusion, and delivery performance in real time. These tools aim to strengthen institutional capacity, reduce inefficiencies, and improve transparency in infrastructure delivery. Some of the gaps that were highlighted in today's presentation, particularly in low-income and subnational contexts. So they respond directly to data gaps, as I've highlighted. And my question, having given that background, we would like to find out, is there a platform where we can present these innovative solutions, given the ongoing challenges around standardized data for project delivery, finance performance, and investment alignment. So what mechanisms exist within the G20 infrastructure initiative to support localized systems like the ones that I've just highlighted, which are developed by institutions that have interest in contributing to the infrastructure delivery ecosystem? Thank you so much.
Thank you so much, Sibongile. Henry, I don't know if those questions were for you, but I think it would be good if you give your
my view on
reflections.
what GTAC should do. So maybe I'll first go back to, I guess, a few points that you were sort of mentioning before, and sort of agreeing, like definition is a challenge in sort of locally. I think we talked about the G20 sort of a global level, but even sort of within sort of more regional jurisdiction, that's an issue. I mean, one of the key example was Europe. After COVID, they actually reduced the costs for banks when it comes to capital they have to put aside for infrastructure loans by 25%, right? And so that was a way to spur more investment in infrastructure. And so they really tried to look at what was the impact of that. But because no one was actually capturing infrastructure loans, because they all sort of define it a different way, and there's no sort of great definition, actually they ended up not being able to assess whether that was useful or not, because they couldn't capture that. So I think from a government perspective here, so that's sort of European level perspective, but government perspective, if you don't have that consistent definition and data, it actually becomes very difficult to assess whether policies that you may have implemented to support infrastructure investment are actually effective or not. So that's really, I think, even if you don't look at sort of the global aspect at the local level, that's very important. And I think I just want to go back to your sort of point around pipeline and the credibility of that pipeline. I think, look, like everything, it takes time or it takes scale, right? And that's only when you have enough deals that you really start getting the attention, or deals that actually worked, that you start getting the attention and the trust of markets. And that's where you start seeing some of those data points, including the default rates and the evidence that we've seen, actually sort of really getting into the brain of investors. You do need that time and scale. So what we see by and large is that the countries that are most successful, the one that had programmatic way of looking at pipeline. So renewables in South Africa is one of them, but there's others as well, or scale. And so that's where you see sort of private investments in some markets really going really well in large markets, like take India, for example. You have the scale. And so, within a couple of years, you can actually get all of a sudden 100, 200 deals that are very similar. And the market loves that because obviously that's, replicable. You start having that market data that gives you, very good benchmark as to where you're investing against, very liquid. And so I think that's kind of the aim, but it takes time, right? It's that's where I think the pipeline credibility at the end is very important. I'm not going to mention names of countries, but there are countries that were very famous for having, 500, pages of pipeline of PPPs. And in a way, even though that's commendable, actually that gave the wrong signal to the market. I think most investors were actually reluctant to go into those markets because, it's just not possible. The data tells you it's never happened before, and there's no way the government can prepare like hundreds of PPPs all at once, right? So I think you kind of need, again, time and scale. That's what gives, in a way, those market data credibility, and then you start having an impact on the markets. So now coming back to, I think, the first question around benchmark, I think that's one of the things that I mentioned is that there is imperfect, but there is data that are usually collected by, and again, governments, but also DFIs. Every time a project gets done, there are some, at the very least, projections. But what we see by far and large is that, except the price tag of the infrastructure, and even that sometimes we're not exactly sure how much it did cost. But all the other assumptions, data usually die there, right? They're not collected. And so as a result, we kind of lose that ability to have benchmarks on sometimes projections. So they might not be the actual sort of final sort of cost of capital, but at least some kind of sense of what were the sort of previous assumptions and what we got in the past. And so as a result, you end up with a market where you don't have those benchmarks at all. And that's there's a bit of a pity, but that's something that is quite consistently seen across markets. It's the difficulty in sort of capturing those evidence and transforming that into benchmarks. And that's like I say, it's a bit of a pity. I'm not only on the finance side. I did a lot of work on transports, and it's always fascinating to see how sometimes you start and you study maybe a rail line, and there's been 20, 30 studies that have been done, but then the government doesn't have benchmarks at all on any of the parameters, and so you need to restart from scratch on any of those parameters, and that makes obviously project very difficult to compare. And so both from a government perspective and investor perspective, this lack of benchmarks means that they're going to have to restart from scratch. They're going to have to take assumptions, and they're going to necessarily add a lot more risk premium. They may actually be more conservative than they need to be because of the lack of benchmark. The third one, I think, on sort of procurement and the platform, I think that's very much something that's aligned to the other data notes, the practice guide. That's sort of looking at ways to digitalize the platform of infrastructure opportunities. And I know, Bachimolo, I think you were planning to have a discussion organized with Source at some point. So I'll let you sort of deal with that one. But certainly I think there's there are certainly solutions out there that could enable those project data to be more accessible to everyone.
Yeah, thanks for that, Henry. I think, to be honest with you, let me start with Rachel. There's a lot of information that at the Treasury that we sit with. We have not gotten to the point of coming up with benchmarks just based on that information that we have. So I can tell you about the aspirations that we have, but that's not going to help you very much, except to say that the big thing for us that we are trying to do, at least at this point in time, one is to ensure that we, from a government perspective, we do actually have that credible pipeline, and we make that pipeline transparent. In other words, we make it public, because that's where the lot of the issues in the last couple of years have been. And I suppose as we develop our own capacity and capability, then we can even start getting into some of the analytics insights as well as benchmarking. So the short of it is that at the moment, we sit with a lot of data that we are not necessarily fully utilizing. But the intention is to change that over time. And then, Spongile, I just want to say, in line with what Henry has also said, is that that we've been trying actually for a while we are in the process of reforming our procurement system. I don't know if you are aware of the MAPS process that we did last year. One of the things that was raised there was this point of using solutions to sort of give real-time insights into the procurement process and so on and so forth. And, Treasury, I know, has been doing a lot of work in terms of digitalizing its systems, getting into that space. I think we can touch with you separately. Nobuntu, I suggest you do that. We just touch base with Spongile separately and see, if we can create some kind of an opportunity for the solutions, the innovative solutions that Spongile was referring to, and how that, some of that can be presented, whether within the G20, within this very platform, or anywhere else, including with our OCPO division. I think that's something that we can deal with on the site. So yeah, I don't see any hands, and I also don't see questions on the chat. I know that we are also left with 4 minutes. And I think what I should do is really thank Henry, and I think I saw Jane, Bailo, and the other World Bank colleagues that have joined us.
Manfred as well. That actually
Oh,
done a lot
Manfred
of
is
work on
also
that,
here.
on
Oh,
this data
lovely.
note. Yeah.
Lovely, lovely.
So the
No,
whole
no,
team, the whole team is here. Yeah.
The whole team is here. That's good. Thank you very much for the support. So, just to say thank you to the Global Infrastructure Hub, the PF team, for being here. It's quite early, still relatively early in DC. So we really appreciate that you are here with us, and really to our colleagues that have joined us here to listen to some of the work that has been done as part of our G20 presidency. The link to the report has been made available, and because of the good relations that we have with the PFGIH team, if you go through the note, what we call the market data note, and there are specific questions that you have, please reach out to us. We can still answer. We can still answer those even after this session. And the last thing that I want to say is kindly see the Knowledge Hub link there. If you could just rate this seminar, and if you could also promote these Friday webinars that we are running as GTAC. Thank you to everyone. The session is officially closed. Thank you, everyone. Have a lovely
Thank you,
Friday.
everyone.
Thank you very
And
much.
weekend.
Thank you.
Thank you.
Thank
Mr. Sibongile.
you.
Thanks.
Sibongile, could you just put your email on the chat so I can get it?
Thank you.
I will do so, Nobuntu. Thank you very much.
Thank you so much.
And it's lovely to hear your voice, Mongile, after a while.
Yes, indeed. Thank you so much for this platform. Thank you.
Thanks.
I look forward to meeting with you. So I'll definitely share my contact details.
Okay.
All
No,
right.
that's fine.
Thank you, colleagues. Thank you so much.
Bye-bye.
Thank you. Bye.
Bye.